So there are a couple of things I wanted to share with everyone today. Two particular posts I've made. I've made comments on commodity prices, and we did publish something on the Shanghai index. Now, if you just look today, we see an across-the-board weakness across Asia, and I'm not really sure what was driving that, but pretty much Taiwan, Jakarta, the only thing could be maybe some currency moves, but they haven't been massive exactly. So this must be just some pent-up selling coming across. But when we actually look at the structure of China, the Shanghai Composite is what I've been studying for years. It's a slow-moving index. Some people may say Chinese market is much more controlled because of the way its economy or governments are set up, being a controlled economy. But what we've seen since 2008, means this market doesn't always correlate, with global equities, but at times what it does is does pretty well. Is that it does, move once in a while with a lot of momentum, and then it really dulls out. So there are these long dulling periods. So you've seen this strong move in the late 2008 along with the rest of the world. And then it went into this long dull period where it did something very different from what other markets were really doing, which was still recovering during that phase. Then there was one speculative run up here, and then a lot of margin calls got taken out on the way down. And then since then, the market's been flat. Now it has been trying to, when we look at this long term, we think, okay, is this an impulse? Is this a series of 1, 2? What are we really trying to do over here? Because we are making higher highs when we really look at this long term trend line setup. So very, very short term, when I've looked at the internal wave counts, I feel at least this is an impulse. So I initially marked this as 1 and 2, and I remained bullish from this low point because this is some kind of a ABC or WXY correction. Let's just broadly say ABC. That makes our life easier just in understanding what is going on. So once you've done ABC, you did 1, you did 2. So you should have started 3. And so I was bullish from this point. And we do see another very clear 1, 2, 3, 4, 5 structure up here. So I would have liked to say this is 3. It didn't go very far, and then it's pulled back in the price range of the first. So we end up thinking, okay, maybe this is 1 and 2 again. And now we are seeing the same thing all over again at a smaller degree in time in the very, very short term. So essentially, this is since 2019. The Chinese market has been trying to make an attempt at moving higher, but not really being able to do so. So I'm going to just slip to a weekly chart. So when you look at the weekly chart, what I actually see here is a 5-wave advance, something like this, 1, 2, 3, 4, 5. And then there's this ABC structure. Some people may not be clear as to, how this forms. We essentially have a running triangle. Triangles are Elliott wave formations which are 5-wave, and they usually occur in the midway or before the final stages of a move, and they have like 5 legs inside it. So if it is a bullish triangle, which means the preceding trend is up, then prices pull back in like A, B, C, D, and E once more, and then they move in the direction of the trend. Now this is of course a downward trend, so the same thing would happen upside down. The only difference here is that this low did not really touch this line, which is the normal triangle. Now when it doesn't touch, then we call it a running triangle, but it still has 5 legs, which means A, B, C, D, E in the reverse direction, and then it starts the next leg down. So this is basically an A, B and C correction, because the B wave is the triangle over here, and fourth waves and B waves tend to be triangles. So here it's a clear B, and therefore this ABC correction should be coming close to an end. This is sort of what I published 2 days ago, and what we've ended up seeing in the last 2 days is an attempt for prices to bounce back sharply, and then they've sort of gone a little flat over here. I would think either wave C is complete. Some people can argue there may be one more leg down, but I think there's a good probability, because it's a 80% retracement of the last rally, that we should be done. So which means we've just generated one more first and second wave, which means I call this 1 and 2. And once again, we will attempt to start a third wave higher. This is what I'm thinking about China. So China is taking various steps in terms of trying to lower interest rates, stimulate demand, and so on. It's also been under lockdown because, and after lockdown, they've gone into the zero COVID policy where they're sort of not participating in the world economy right now, and because they really don't want COVID to spread. And so that policy is keeping them tight, but at some point of time they have to open up their economy, which would sort of bring back demand in some parts of the world, and some of the depression we see in terms of oil demand, say for example, is expected to create some demand pressures, which the Fed is really trying to fight. So that's the other part of the story. But near term, it would look like China's priced in the worst in terms of the no COVID policy, and whenever it opens up, the Chinese market could also race up to the upside in the reopening trade, as many other markets have done already in the last couple of years. So very interesting place to be then, that is China. Now, like I just said, that there could be a impact of positive demand rub off China to commodities if some of that commodity demand kicks in from China, which has been missing. Of course, the US raising rates has been one of the pressure points for the dollar, and then subsequently the commodity prices. But the dollar's run up so much that even if it pauses for a while, it creates reason for commodity prices to move up. But I'll start the discussion with copper, because when copper fell in 3 waves, we got a sense, and we wrote a note as well, that maybe this is only A and not an X, and we have not started the next leg down. Maybe this is just ABC, and we might again attempt to go higher. So far that has been true. It has pulled back a bit over here, but again it's holding higher than the previous low. So we are seeing higher highs and higher lows, in which case if this is B, we can probably go back to the top end of this channel, closer to around $3.9. But note that the dollar in this period in October actually made a higher high, which means a new high in the dollar did not result in a new low in copper prices. So here we have an intermarket divergence, where typically in the past you've seen each high in the dollar causing prices of copper to come down. Suddenly that was not happening, and so that sometimes becomes an early warning that there's going to be a slightly longer pause either in the dollar, or even in a small pause, this particular market will make an attempt to bounce back more, because something is pending on the upside, or maybe it's oversold. And the worst case scenario, you would say maybe it's bottomed, but we'll need more evidence for that, because bottomed I would only say after I'm sure of what the dollar is doing. But yeah, after such a deep retracement, why can't it really have bottomed? So that is a fair question. In fact, when I look at aluminium, that has been on my mind for a while. 1, 2, 3, 4, 5, 6, 7. So when you have 7, you can either say that this is A, B, and then C is complete in 5 waves, 1, 2, 3, 4, 5. In which case, why can't we really have a bottom in aluminium? If nothing else, a larger X wave, not a smaller one, but a larger one, which means going back to the previous 4th wave, but who knows, retracing 50 to 60% of the previous decline. Now with cases like aluminium, and so let me also highlight that when copper did not make a new low, we did see a new low here in aluminium prices. So that's been one of the observations, but not across the board. So for example, if I look at nickel, it has stopped making new lows since back here in July. After it bounced back from July, it's been sort of in a broad range. Okay, so there have been divergences within the commodity spectrum. And even there, so are we really looking at upside, and what is really driving that? I mean, nickel has its own reasons. There was the demand from the EV story at one point of time. Then it really became a story related to Russia, but then as sanctions were put, things were tightened, interest rates were raised, and demand slowed, and China is in lockdown, prices really fell back a lot. But now they're starting to sort of hold up, and so there was also a news flow around this aluminium bump up. See, not the first one. The first one occurred on its own. So that is how markets sometimes are ahead of the news, and pattern is already completed. Market starts to bounce back, and then the news shows up. The news that shows up is that US might actually put sanctions. They haven't done anything yet, but that has led this 2-day bounce in aluminium prices, that they may actually put sanctions on Russia, and if they do, then that is sort of reduce supply of aluminium in the world, and that means higher aluminium prices. Now, I don't know if this is so you can go into conspiracy theory, because now you think about it, isn't that what OPEC did some time back? They were like, well, demand is low, let's cut oil supply, and so they actually cut oil production, and oil prices started to rebound. So what I'm really seeing is an attempt at keeping this price sell-off in commodity prices to really become aggravated and go into a deflationary setup. After a very long time, we had seen such a strong rally in commodity space, which has caused cyclicals to do so well, and now it's all falling apart. But because in individual countries like say India, USD INR has gone up. So in constant currency terms, you would actually see commodity prices holding at a much higher level. Say for example, you open steel, okay, and we actually look at steel NCDX futures, which are actually trading now, and then you look at the history. So what you're actually looking at here, let me just 1 second take a line chart. Yeah, so this gives it much more clarity. So from the bottom here in 2016-17, steel prices are actually much up here, and they haven't really fallen so much. If you look at this, just a minor pullback. Part of this is because of the currency impact, because USD INR going up ensures that in rupee terms prices don't come down so much. That is the same thing which happens with gold on a long-term basis. When when rupee depreciates, gold prices in India actually don't fall as much as they do in the US. Like they could be a 50% decline in the US, but in India it would be only a 30% decline because of the currency support that we end up getting. So this sort of helps commodity companies, and that is probably explanation why moment the market has bottomed in June and rallied, we've actually seen metal stocks not sell off much. They actually have had quite a bit of a rally. But more than that, it looks like there is support coming in, whether for good reasons or bad reasons, for commodity prices. Like we spoke of aluminium, we spoke of oil. And in oil, what I would want to really watch is what happens next. So far it has risen in 1, 2, 3 waves. It's pulled back in a fourth. Now, if it does start going up from here, we would end up getting a 5, and that would mean an impulse. It would actually scare us as to, whether you've started a new upward trend in oil prices itself. And even if not, a 5-wave advance would be wave A, which means even if there's a pullback, it will go back in C to an even higher level. So whether it's impulsive or corrective in larger degree, the first rally impulse can be 1 or A, and that simply means that that's not the end point. After a pullback, there'll be even higher prices. So we eventually then end up at 180. So next couple of days, we're going to be watching whether oil actually gives us an impulse. That's going to be critical, and moment we get that, we'll know that medium term we have an even higher price in oil coming, and that again would push back on the inflationary story, because to some extent inflation numbers have become sticky, and if commodity prices stabilize and don't keep falling, then that inflation data may come off a bit, but again slow down and stay where it is. So it will come down very, very slowly, essentially. Even if prices remain constant, for example, they don't make new highs, but they stay at the same place. The pace at which the inflation data cools becomes much more slower, and therefore it requires many more interest rate hikes. But maybe you can slow down the pace, but you'll still keep tightening, which is the real problem. And so my sense, again, something I've repeated in all of my spaces and communications recently, is that higher interest rates leading to lower valuations is the bigger problem than profitability and earnings growth, because that we can have different arguments about as to whether growth can sustain, can't sustain, and there's enough, especially domestic demand. We are talking about India, but valuations is where the interest rates play a role, and therefore would elevated prices result in higher rates on a continued basis. Really tricky. But from a trade perspective and from an opportunity perspective, what this all is meaning is that we are going to see higher prices in commodities, which could fuel metal stocks, and we'll also look at whether oil and energy also adds up to that. So far, oil stocks also have rebounded, at least in the US, and if we do see a 5-wave advance in crude oil, I'm sure oil and gas stocks in India can also probably get a bid. So these are the interesting things to watch out for. And so commodity prices have been one of the indicators giving a lead indication that why equities may probably hold up. China is the other one which people fear, but could be at the end of its correction. The only other news flow which is floating around right now is related to the UK. Tomorrow is Friday, and my only thought on UK as far as the currency markets are concerned is that the GBP, okay, so I'll just focus only on that singular currency right now before ending this discussion, is when we actually look at the USD GBP, this was the peak, this was the panic. The news articles now in the media are making it sound as if this is the panic. No, this was the panic, this is over. Now what the BOE is really saying is that, boss, whoever has these exposures in the bond market which is causing a crisis, you need to clear it out all out by Friday, and after that it's your problem, which simply means that before that it's our problem and not your problem. In other words, the BOE would support people who come up and book their losses. They would probably take that off their books, and so surely if somebody is standing there to take your problems, you'll probably hand it over to them and In other words, what it means is by tomorrow, all the negativity is over. People are getting scared. What will happen UAE? What will happen England? What will happen UK? Nothing will happen. It's over. It's already happened. You're talking about the past. You're talking about news that's already in play. That's not how markets work. USD GBP was going up for the entire last year. If you're worried about it now, you missed it already. So that's yesterday's news. What you're hearing today is just the manifestation of what ended up happening last year. In fact, I think I've already published this longer term chart where we ended up reaching the top end of the trend line of the highs. I projected that would happen. I thought it would happen in 6 months. It happened in less than 2 months. So that's just markets. That is why I always say time is not a science. Sometimes things happen faster than you expect. Sometimes they take longer than you expect. But the wave analysis does give you very good results in terms of your expectations playing out. And that's already happened here. Now, can this result in an even bigger move longer term from here? We'll try to judge that. But if you just look at this, this is a monthly chart of the USD GBP. It will look like 1, 2, 3, 4 and possibly 5. And if it stops here, we'll watch till the end of the month. And if we do close down, we've completed a 5-wave advance. And even if it has to go higher, it means there could be a consolidation before it goes higher. And I don't know whether that consolidation is 6 months or 1 year, or what is the time length, as we have seen previous long consolidations. Will it become something like that, or is this just a quick dip and continuation story? That we don't know right now. But a long pause could really come in if a 5-wave advance is complete on the USD GBP. So like I said, news always follows the price. Price has already moved for more than 2 years on the way up, and now the negative news is really spilling in. Over the next 2 days, most of it will be over and discounted. So that is my sense of what's happening in the UK bond news flow based market or the currency market. And till something new comes up, this is where we are on this. So these are, I think, the updates that should help you think through the next few days. And that's all from me for today, 13th of October 2022. Thank you.